Hi, welcome to Gold Star Payments. We are reporting today the findings through our Golden 8 technology. It's the first automated intelligent technology that can reconcile full circle from transaction to deposit, including all expense, all interchange, all assessments, downgrades, things like that. Follows GAP principles, automates accounting, and we're reconciling both successful and failed transactions so merchants can discover all missed revenue and have a clear path to recover that. The payment industry is now over a $2 trillion industry. It dominates the way that we exchange worldwide, and it continues to grow at a record pace over double digits. It's built on an old banking platform that's been built on for about 70 years. There's audits that are done every year from JP Morgan, TSYS, Javelin, several others, Barclay Bank, things like that. And today, the findings on the error margin in this industry are averaging 10%. And there's a couple different buckets that are causing and creating this 10%. But the 10% is caused by an average of 3.5 to 4% of errors on a retail side, so a card swipe transaction. And it escalates up to 15 to 17% on card not present transactions, such as Moto, mobile, recurring billing, e-com. That combines to about 15 to 17%. Combine that, the industry error margins running right between 9 and 10% each year. That's causing merchants to lose billions of dollars, around $203 billion lost in 2018 due to these industry errors. The payment industry is a complex industry. Like I mentioned, it's built on an old 70-year-old technology called COBOL, and it's built on top of a banking platform. So you'll see a lot of people speak to a green screen, and it's very difficult to see a transaction with any type of perspective. It also has many touch points in this industry, and it's very complex. So today, when you run a credit card, it's going to come into a merchant or a business, and it's going to be run through certain hardware or software that's going to secure that information, truncate it, and then pass that into the payment processing industry. And it doesn't matter if it's mobile, whether it's retail or e-com, it's going to pass through an API, through a network out into the card association. And it's going to do this 2 times. So the first time through, it's just getting an authorization. So when a card is run, it goes through, one of those forms, retail, mobile, e-com, through the card network, through the card association, and to that card issuer, just to get an approval on that transaction. So the business then gives them their merchandise or their service. From that point, it has to go back through that process again on a settlement side. So it goes through the processing touch points one time on an authorization and then one time on a settlement. So on the settlement side, it's going to go back through the card association, through whoever issued that card, could be the bank, could be the card brand, and then it will go back through, once that's approved on a settlement side, it will get pushed through the same network to an acquiring bank. And this time the acquiring bank will, so that's like at a sponsor bank or a deposit bank, they're going to push that through the Treasury Department to then a deposit bank of the merchant. So it actually goes through this network 2 times. And what we find is there's a lot of black holes in the industry. Today, there's some interesting statistics that we're finding as a processor in managing the processing networks relationships. We're grabbing the data from each of these touch points, and every touch point adds to the complexity. A lot of data gets lost, a lot of data gets added, and all the participants are not always following the same Visa MasterCard standards. For example, in the last 3 years, Visa and MasterCard put out a mandate that a refund needs to be identified as a transaction. Today, it is not identified in almost all data in the industry as an actual transaction. Therefore, it gets lost. It doesn't have unique IDs, things like that. Also, in these different touch points, this creates a file, certain files of data from the issuer. There's certain files of data from a deposit network and the reserve. There's files of data from the card association. There's files of data from the gateway or the, how the transaction is originated. And each of those do not follow the same guidelines. And so that also creates a lot of industry issues for merchants, and reconciliation, the lack of reconciliation is increased because of these different touch points and people not following the same guidelines. That's also why non-standard codes like a do not honor code are greatly being increased. Typically, we're seeing from where they used to be a year ago of about 14% of declines, all the way up as high as over 80% nowadays. So, what is in the touch points and with the industry errors? What is causing that 10% of missed revenue or industry errors, and how much is recoupable? And it really breaks it out. We break it into two different departments. One is transactions that are successful, that are actually authorized. There's an error margin inside of that from when it goes throughout the network. These are the error margins that are happening in the different steps in the authorization to settlement network. Okay, so these are actually approved, authorized transactions that most businesses are assuming are successful and being deposited. These are those error margins. After this, I'm going to show you where there's actually a lot of missed opportunity for revenue inside of the declined or the error transactions as well. So in the industry today, when you have a successful transaction, step number one here, or category number one, authorized transactions declined by the issue or the network. So this went through the network one time, got approved, and now it's going back through to get a deposit and it gets rejected. So 0.32% of authorized transactions are having deposit errors. And processors are trying to work through a lot of declined or rejected transactions. But as that gets approved, there's 0.32% of those are having deposit errors. So merchants are losing money on transactions that they think are getting deposited because they were successfully authorized. Today, 1 in 3 transactions are being partially authorized and often not flagged in terminals or software. So the industry today is authorizing partial auth. So you run a transaction for $164, but the customer only has $132 on a debit or on a prepaid card or a gift card or something like that. And so what happens is certain terminals, certain software, gateways, things like that, point of sales, are handling that correctly and some are not. And we're finding a lot of error margin inside of this. And so we've seen as the network actually often is feeing on the original invoice, so $164, even though what was actually approved was only $132. The businesses are getting feed from the credit card industry on the $164. So that's one error that we see on a regular basis. The other error margin that we're seeing is a point of sale. Some are handling that, but a lot are switching original invoice from 164 down to the 132, and they're changing the invoice to be 132. So the accounting department thinks that they got paid the full amount only because the point of sale screwed up and did not track an original invoice. They switched the invoice. So accounting thinks they got paid, but in actuality, the business just lost $32. Another way we find errors in this is some terminals will flag that is a partial auth, and they will say, here's your partial off of $132, but it'll say that it's only partially auth, but they're then leaving it to the merchant to calculate what they need to bill at 164. The issues lie in two different areas. One, we see a lot of merchants doing the math wrong because of the fees. There's also a discrepancy there. Often just doing math wrong creates a discrepancy, as well as if the processor is billing on the original invoice for fees, then that also screws up the math. So there's a lot of merchants that are leaving themselves short on these partial auth. We're seeing, lots, $252,000 a year last year is the new record for merchants that have lost revenue to these partial auths. The visibility of authorized but pending transactions. So in the gateway, companies are going in and they're optimizing, and they're doing more in the fraud protection realm as they get hit by different types of fraud. And what that will do then is send more and more of their transactions, even though they were authorized, then they get sent into a pending status on the settlement side. So when it goes through the network the second time, it is then sent into a pending status. And in most gateways that we see, you can find those pendings if you know what invoice to look for. But almost every company we've seen are fulfilling off of authorized transactions. Therefore, they're not seeing that in a deposit or in a pending status, and they would not know what invoice to query down into the gateway to find those pending status. So in our technology, it's going to flag all pending transactions, making sure that when something gets authorized, you can track it to the deposit, and we will bucket those. So every day you will know at a transactional level what you got deposited on and what you didn't. Decline transactions, errors, including non-standard errors. So there's a lot of touch points in the industry. If everybody followed the same guidelines, there would be less non-standard codes, but they're not. So the industry is struggling to know how to bucket different error codes on a transactional level. And so we're getting more and more non-standard codes. Do not honor is a very famous one. And so today in the industry, you're going to get an increased amount of do not honors, and it doesn't tell you then what to do with the transaction. So merchants get stuck calling or trying that same transaction 3 times, and they will get a percentage of those customers, because inside of do not honor are a lot of soft declines, things like insufficient funds, AVS, CV2s, standard error codes that are mislabeled and are now in a do not honor. But if you would know exactly what to do to fix those, you could just make one adjustment and then those transactions would go through. The industry has labeled those as a hard decline. In reality, there's a whole bunch of soft declines that are recoupable. And so in a fulfillment state where you're going off of an authorization or in a reoccurring model, you're going to find a lot of missed revenue in this do not honor. And our technology will, for the first time, show you exactly how to fix those transactions, even in the non-standard error codes, and so that you can recoup that money with just a quick click of a button. Find missed billed processing fees. So there's level 2 data in the industry. If you pass certain data points, then you can get a discount from interchange from the card brands. Same with level 3 data, and those can range from 0.25% discount up to 1% of a discount. There's different things like Verify that will transition a chargeback, the chargeback liability, but it also can get you a discount on interchange. And then merchants spend a lot of time trying to negotiate competitive rates, but to audit those so that you can flag all 64 fees and know that you're actually getting billed what you're supposed to be getting billed, as well as optimizing your expense from the card brands. Most merchants don't realize that their biggest opportunity for savings is, one, recouped revenue that's being missed in the industry is their largest one. And their second largest one is actually pushing more data and optimizing the different opportunities that they have to get a discount from the card brands. So a lot of merchants are fighting over a penny or 2 pennies or 5 pennies. In reality, they could have had a 0.25% up to 1% discount by just being more intelligent about their billing. Now, how do you prove that? How do you audit that? The only way that you will see it at such a high level, I mean, you could count to 10, but if you're doing any kind of volume, the only way to audit that is automated reconciliation to the penny, to the transaction, including all expenses. So that's what our technology does. And for the first time, merchants know they're getting billed correctly and they can flag anything that's misbilled. Track deposits from the original transaction. So in the industry, 1 in 3 pieces of data needs repair. So there's over 3,900 pieces of data that we have repaired. And with that, you can see why there's there's different issues with reconciliation. There are transaction IDs that are duplicated inside of a batch. There's transactions like refunds, chargebacks that don't often even get a transaction ID. There is original invoices that are often switched after a transaction is settled. So it might have authorized with one ID, but when it settles, it switches to a different invoice number. There is things along the lines of dropped data, even authorization codes or approval codes are being duplicated from the same merchant inside the same batch. So there's all kinds of industry issues that are causing accounting groups that are working so hard to reconcile. They can't because the data that they're given has all these flaws. So we have repaired that data, and it's taken years to make that then relationable and created all the logic. And I'll show you that. Live chargeback reporting. So there's no emails that you have to wait for. There's no letter in the mail that you have to wait for. It's live every day, and it gives you all of the information you need to dispute. So even the information that is not required, such as the name, historical data on a transaction, you'll actually be able to see how many times they charge you back, how many successful sales. It'll track the financial information for that customer. What have their fees been? What are their chargeback fees? What have their success? So you'll know, is this a profitable customer? What do I want to do? Do I want to shut them off? Do I want to keep billing them? You know, you're fighting a customer. You're not just fighting a chargeback. So you'll have all that information right at your fingertips. Identify and stop repeat chargeback offenders. 68% of chargebacks right now are from repeat offenders. So if you can identify their historical behavior, then you'll make better intelligent decisions on your billing. And when the fees for chargebacks are from $15 to $35, and even to recoup those often are from $10 to $30, you want to stop chargebacks, not just win chargebacks. So that's very, very helpful. Missing data, multiple industries, touch points drop the data. So there are a lot of gaps in the data, and we've completely rebuilt the industry reporting to follow the standards as well as following the GAAP principles. So it's the only reporting system that has statements that follow GAAP, and all of the analytics and reports follow the GAAP principles, so your accounting can be fully automated as well. We also are flagging skimmed cards, fraudulent cards, prepaid cards, so you can track what's in your billing cycle, what kind of customers you're getting, and stop that. So today in the payment industry, you're flagging, it was declined or it was successful, but you don't have any information on these ones are all skimmed cards. These are customers using skimmed cards. There's a lot of intelligence and visibility that can be created there for you. So those are all successful transactions for the most part. This is how to handle decline transactions. So there's a lot of missed opportunity inside of this. For example, 52% of what is being flagged as fraud is not fraud, according to MasterCard and their fraud prevention group in Ethica, and that's across all card brands. Today, here's the graph or the statistics that make up the decline transactions. 44% are insufficient funds. 9.4% is only fraud. So of this 9.4%, half of it was actually not fraud, right? Now, 20.6% is industry errors. So things that could have been successful transactions, the industry just erred out. Some of that you can just rerun. Some of it needs fixed, but it's industry errors. 15.2% is being caused by non-standard errors. So this is where you would find your do not honor codes, and there's a lot of other non-standard codes that are kind of fill this pie. And there is a lot of missed opportunity in revenue here. Currently, we're recouping about 42% of non-standard error codes if they're doing recurring billing or fulfilling off of, most of it's coming out of the recurring billing side. BIN sponsored processor. We are a full BIN sponsored processor. What does that mean? A BIN is your address on the Visa MasterCard network. So it's an additional registration to be able to access the raw data from the industry. We did a complete rebuild of the reporting, and we needed to have access to the raw data. And we tried to work through industry reports, but found so many errors that to create the solution, we had to get all the way to the raw data, both for the card issuing side as well as the card processing side. We've done that on the TSYS network, and we had to have our own bank relationships. So now we do our own underwriting, our own risk management. We do all of our own tech support. We build our own files. Everything to do with those pieces, we do internally, and then we work closely with our network partner and our banking partners. So with us, everybody is assigned a personalized account manager. So you have a junior account manager and you have a senior account manager, but you're not calling 1-800 numbers and talking to a different person all the time. They know your business, they know how to optimize your revenue, and they understand the issues in the industry, and they can do anything that you need to manage your account. We also have the automated intelligent technologies in what's called Golden 8 technologies, and we're averaging a 1.4% retail recoup of revenue, and we're averaging 7.3% on the e-com side. So what is it that is unique? There's the data issues, there's missed revenue in the industry, but what is it that we're providing that nobody else is providing in the payment industry? Well, the first thing is, and it's really the foundation of this, is reconciliation to the transaction, both the successful and failed transactions. So that is the centerpiece, that if you can get that level of visibility, now there's almost a limitless opportunity to be able to optimize your business, your success rates, limit fraud, things like that. We flag fraud. We find and recoup missed revenue. So we are bucketing your opportunities. One of those buckets is your non-standard, so do not honor, and we will show you how to then recoup the revenue that was lost inside of, or this missed opportunity inside of do not honor, without having to call the merchant. And we'll show you which customers you do have to call, right? So not without calling the merchant, but without having to call the customer. We're going to source and fix fraud alerts that are false. We're going to show you to fix errored card brands and network reporting. So all your deposit errors, all of your false, fraud prevention stuff, all your fraud alerts that were false. We're going to identify good and bad customers. So you're going to see a holistic historical view on your customer, and you'll be able to know who your repeat offenders are. You'll be able to track profitability, and it's going to help your profile with the payment industry as well, that lower your chargebacks, lower your refunds, increase your success rates on your billing. That all helps you get the limits that you want as far as processing, help you lower your fees, become a healthier merchant. Custom reports, fulfill reports, terminal success. Once you have this level of visibility, there's all kinds of cool things that you can do. In the gas station industry, for example, they really want to know their terminal success. Grocery stores as well. It's thousands of dollars to change out terminals, and right now they're typically swapping those out based on complaints versus actual statistics. So that's hugely valuable. Fulfillment reports, helping merchants know that they actually got paid for every item that's been shipped out, or every service they're providing. And if it's not in that report, they need to represent it, right? So it's a way for them to track that they're getting paid on every transaction. Today, the record for companies that have fulfilled product on an annual basis was $3 million that was not collected on. Automated accounting, it's the first cash and accrual, prep to the ledger, daily, weekly, monthly, annually, whatever you want. And it will, it's all prepped to the ledger. So you can literally just download it, or you can copy and paste it right into your accounting, and it's done. We are doing integrations with NetSuite, QuickBooks, and others. But it's easy no matter what platform you're on to be able to download or to copy and paste that in. And it's done daily, so whenever you need it. Track business decisions to the bottom line. So a really easy to use, customizable dashboard that you can help build your team and be able to work together to optimize results. When we started in the payment industry, we were tried to work in the payment reports that were there, and we would say, okay, we need this. We're trying to go, full circle reconciliation. We need this. And the industry would say, we don't have that, but we have this report. And so they would send us this raw data report, and our data scientists will pull this apart and know, okay, these 6 digits mean this, these 3 mean that. And so they're able to pull this apart and make it organized, right? So today we're digesting over 850 raw data files daily, weekly, monthly, as they're available in the industry live. And we have organized that into over 3,900 data columns now, with over 1,500 logics or subs with over 22 subsets. So you now have a relational database for all of the industry's data. Now, other processors could certainly access this data, but it would still take years to break this apart, make it relationable, and then create the logic into being able to reconcile to the penny to the transaction and pull together all of the industry's data to make this happen and easy for merchants to use. So the first thing, of course, then is being able to reconcile to the transaction. And then here's, of course, the dashboards that you can work off and your team can start working together to optimize. Some of our screenshots. So here's your transactional reconciliation. It'll include all of the industry fees, all your third-party fees like gateways, things like that. And so you'll be able to hold them accountable, as well as you'll be able to know your expense. You'll be able to know all your successful transactions. You'll be able to know all your voids, your declines, all your chargebacks, whatever is happening to you on a daily basis, you will see it, and then it will flag all your pending. So you'll know that those did not get deposited. It's a way for you to obviously optimize revenue and expense. You'll be able to hold your partners, your third-party software and other partners accountable to your contracts, agreements that you have. And then you'll be able to automate accurate profit sharing. So for like franchises, things like that, for taxes, you'll be able to know that you're paying the right amount. Most of our merchants are paying too much. 8, accounting, you will have everything prepped to the ledger, and all categories here you can do cash or accrual, and you can download those daily, weekly, monthly, whatever you want. Whatever time period you put here, this will be relevant to those time periods. The do not honor, the non-standard codes, that whole bucket of opportunity in the decline world is a huge revenue opportunity for businesses, especially in the recurring space. On the e-com side or on the retail side, it's also a way to track, optimize your success rates. So you may not recoup money that was declined on on an online sale. You're expecting that person to want those shoes so bad that they pull out a different card, but you don't know if that actually happened. So if you're not tracking an original invoice and seeing an additional transaction that's coming through with a different card, you wouldn't know your success rate of them pulling out another card. They might have been frustrated and just left. So you do want to work your declines, and you want to make sure you're optimizing your settings inside of gateways, fraud prevention, things like that, to make sure that these are going down, right? On a recurring side, it's an opportunity to recoup revenue that's being missed. So without having to call the customer or without paying fees, transaction or authorization fees 3 times when you try to rerun the transaction 3 times with no intelligence, then that can all be saved, right? We will show you how to make one click switch and then represent the transaction, and it will go through. Or we will show you which ones will never go through. So don't rerun them 3 times. These transactions would never go through. So we bucket these into a do not honor or your non-standard error codes. We'll show you exactly how to fix those. For example, right here, the industry reported do not honor. But in reality, in our technology, we show you through the other data that they moved. Neither the zip nor the address moved. And then you could click on that customer and you could see, are they a healthy customer? And I'll show you how to do that. And you would know, okay, am I okay to take off the ABS on this customer and just push that through or not? And I'll show you how to make an intelligent decision about that. Fixable are a one-click fix. So we're going to show you these transactions. If you just made this one adjustment, they will go through. And again, you'll know if that's a healthy customer to do that. These transactions, you will know for sure, these are never going to go through. This is your call list, and you can assign that to your team to call and update that information. The industry's redos right here, the industry broke. There's nothing you have to do different. Just rerun this transaction, and you can do it instantly. And then soft declines are strategic rebuild. That will help you understand how to strategically rebuild those customers to increase success rates. Knowing your customer is a really big deal with fraud, with revenue collection, just making good business decisions. Keeping a healthy portfolio or healthy reputation in the payment industry is a very big deal. That's how you grow your company. That's how you increase your limits. That's how you lower your rates. And so this information here is a critical element in managing the health of your merchant account. With each customer, it will pull together families of cards, families of individuals using the same card. It will pull all of that information together, and it will show you the health of this family of transactions. So, for example, you would be able to see a sell, chargeback, sell, a chargeback. You would know what is your collection rate, what were the amount of money that's being charged in fees through your chargebacks, things like that. What are they buying? What is your profit margin, and what is, so every detail, what were your merchant fees? Here's the financial detail, so you can decide, do I want to keep billing this customer or not? Is this a healthy customer, or are they just hurting us all the time, right? So this is a big and important piece. Knowing to fulfill off of settled transactions that you actually got deposited is a really important piece. Most companies are fulfilling off of authorized transactions. Some are fulfilling off of settled transactions, but I don't know any that have confirmed their deposits at a transactional level. So on this side is your successfully deposited transactions. This one is those that have not. And if the transaction is not in either one, then the transaction was kicked out entirely. So there are, remember, 20.6% of the declines, as well as 0.32% error margin on deposits. There are, if it's not on either side, you need to represent that transaction. You did not get paid. So you would know, okay, I fulfilled, I sent the shoes, I did not get paid. I need to represent that transaction. Or I'm going to give myself a day if a transaction is way out of scope. So my average ticket might be $150, but my chargebacks are averaging like $600, which is pretty typical. Chargebacks are usually around 3 times bigger than your average ticket. And the reason why is because they're on purpose, right? They're trying to rip you off as a merchant. So if you might set a certain threshold that says, okay, if a transaction's over this amount or over $150 or $200 of our average ticket, then I'm not going to fulfill on authorization. I'm going to fulfill off a deposit, and I'm going to do a check to make sure that this customer's never charged us back. That because typically, like I said, 68% of chargebacks are repeat offenders, right? So there's a lot of opportunity here to make sure you get paid, make sure you're fulfilling customers that are good, healthy customers that you want to fulfill off. Getting charged, one, shipping out the product, getting a chargeback fee, and never getting paid. You get double dinged on some of those customers really, really fast. We have an admin portal where you can get your team all organized. For example, you might want fulfillment, looking at fulfillment reports. You might want accounting, looking at accounting reports. Some of those people probably don't need to see all of your accounting for your whole company or every penny that you make, right? You might have your billing department working on billing, all your declines, all of your fraud stuff. There's ways that you're going to organize your team to work together off of this data and dashboards to optimize your success. We've worked with a lot of different companies. It's really important to understand the industry errors that we're finding out there. For example, today, Vantiv was purchased by Global. So even though it's a WorldPay company, it's running on global data. When you call Vantiv for additional data, it's very difficult because they really don't have access to it because they're a WorldPay company running on a global platform. We run into companies where we've done the actual reconciliation manually with them to show them some things in the industry, but 11 reports today is needed to reconcile to the transaction. We've worked with a merchant that had 365 locations, 2 MIDs per location, so that's about a little over 700 merchant accounts. And so in order for them to reconcile to the transaction, they would have to pull over 8,000 reports. In those reports, refunds are being missed in most of their reconciliation reports to an average of about 6 transactions per mid. Monthly reconciling missing an average of over 184 transactions per mid per month, which is averaging for that business around $11,000 in missed, with accounting errors, right? Uh, they also had chargebacks that were way off. The month we looked at, it was 5 times off. And this company was using a point of sale that was replacing original invoices with the partial auth invoice. So they had no accounting tracking of they were being failed by their point of sale. And it wasn't flagging that they were missing around $21,000 per month based on these partial auth issues. So they were missing $2.6 million in deposits last year that the industry misreported and didn't deposit. Their reconciliation errors in accounting was $38 million, which would certainly affect their taxes. Revenue lost through partial authorizations was $252,000, and revenue lost through chargeback fees, just the repeat offenders, not the actual revenue from the product, but just the revenue from just the fees that were associated, and only the fees with repeat offenders, right? So $318,000 there. They had negotiated fees that were being overbilled by over $1 million last year. And it's a decent sized company. They do about $500,000 or $500 million. Total revenue missed on the books was $48 million. So, their recoupable revenue opportunity was $4.2 million last year. We have other gateway issues that we find where merchants are opting into higher security settings in gateways, and it's sending a lot of their transactions into a pending status. Some specific stories where we have several that have lost hundreds of thousands of dollars on a monthly basis through this, and then they're being timed out. So a lot of gateways time out their errors at 7 days at the time of sale, at 21 days, at 30 days. So most gateways are doing that to free up storage, but we're actually storing all those for years. So if you lose that data, then you miss the opportunity to go and recoup, right? So a big opportunity for merchants there. And that CFO has now boarded multiple customers on the platform. And then even on the franchise side, even on Main Street merchants, restaurants, it's this. We haven't fixed Visa, right? We haven't fixed MasterCard yet. We haven't fixed Amex. We haven't fixed the networks. We've pulled all the data from the industry so you can see all the errors and see how to recoup that revenue, right? And do accurate accounting. So, this is where Main Street merchants were off on their daily reconciliation was off about $2,000. A lot of that is from certain transactions from certain card types. Amex and Discover had regular rejects that were having issues depositing. There was other issues as well. And so we recouped for them last year $44,000. So as a processing manager, right, we're processing on the TSYS platforms. We love TSYS. It's been great to work with, but we haven't fixed all those errors on the processing side. We have recouped over $2 million in billing, in deposit errors, in these industry errors we've discussed. We've recouped for our merchants over $2 million this year. And so it's a big opportunity for companies. It doesn't matter big or small. Online, where we have great 5-star reviews popping up all over online on Google and in social media. We have customers from billion-dollar customers, franchise work, large fulfillment, and online merchants. So the industry, it's an industry issue. It's not an accounting issue. Accounting teams are working really, really hard. But if you have all the wrong data, if there's errors in the data, then it's going to create errors in the accounting. It's kind of garbage in, kind of garbage out type of rationale, right? So the key is we've repaired 1 in 3 pieces of data in the industry. That's how broke it is. We've pulling forward over 3,900 data points with 15,000 pieces of code of logic, as well as 22 subsets of that to give you automated reconciliation to the penny. The competition is going to push forward about 30 data points. And so it's just an opportunity for you to see what's going on and be able to make more intelligent decisions by accessing all of that data in a very easy way. We will sign you an account manager. We would jump on a phone call and get the merchant account. You'll assign a merchant account manager to help you fill out the app. We have online apps with electronic signatures. Your merchant account manager will then set up your account and make sure it's custom to your needs. Do tests before you go live. And then we will come out and we'll do training from your account manager as well as billing specialists if needed, and show you how to recoup revenue, how to find it, how to automate your accounting, things like that. And then Golden 8 Success Team will be training and identifying missed revenue. So we're going to be monitoring for any missed revenue as well. We'll help you flag some of those things. We'll let you know those things are going. If you want to go recoup the revenue, great. If we're the processor, we're going to do most of that for you. But we aren't doing your billing, right? So if you want us to help on your billing, we can. If you want to manage the billing, that's fine. That's great. We'll support you in that. And then obviously, if there's other missed revenue opportunities, we'll help you discover and recoup those as well. And so really, we're just want to be on your team. We want to help you. The technology is built to be agnostic, so we can reconcile for other third-party processors, but their data is far more limited than what we're pushing from the industry. It's about 10 times less, but it still can automate critical things like accounting. It can show you how to audit, fees. It will show you how where there's industry errors to the best of the data that's available. So there's a lot of value there. And then most merchants obviously do our processing as well, or at least where it's available. So if there's certain countries you're in, certain verticals that we're not going to process for today, then we can still either broker those relationships for you, as well as we can still reconcile for third party. And it is cross currency. So it's tied to the London Exchange. And so if there's any, certain countries that are giving you more headaches than others, we would start with those countries and help you clean those up and then move to the other areas that have opportunities. So it's been a really fun year. We have launched the technology side in Golden 8 in February. And we've been able to have a lot of happy customers. We've hundreds of happy customers from all different industries, which I love, from dealerships, retail, to tire, automotive, to a lot of franchise, a lot of online. So we have pages and pages of 5-star reviews and pages of letters of recommendation. So thank you for taking a look at Golden 8 Technology and Gold Star Payments. We're excited to be on the team and add value wherever we can.